Hello folks, how are you all? I hope everyone is cool. So in this video, I would love to show you the precision, okay? How price move from one fair value gap to another fair value gap. Now, in my live streaming, I always talk about that price can't reverse from a random level. Now over here, I'm gonna show you that by this video. I hope after watching this video, you will be understand when you will look for a reaction and when you will expect a reversal. Why I told you that market can't reverse from a random area. Everything I will try to make clear by this video. So stay with me until the end. I hope you will get little insightful or useful things from this video. Here, this green line, the blue line start from Sunday and it is end at Thursday. Okay, you can see market is over here. So today is Friday. As I have this 1 week price action over here, I would love to show you the price action from Sunday to Thursday from 15-minute chart. I'm not going to 1-minute chart. This price is fractal, so if you go to 1-minute chart, you will get the exactly same thing. Okay, before going further, remember one thing. This is 22 YT model. Okay, market has made some liquidity. Market has taken that liquidity. There is a fair value gap. Market come here, went higher, then there will be order block. Market will trade that order block, then it will go higher. Okay, so if you see this low, it has to trade a fair value gap. This low, it will trade a fair value gap, but this low, this can be traded the order block. This is three type of situation. Two low will trade the fair value gap. One low can be traded the order block, maybe the breaker block. I will try to explain everything, but if it is not, it is really not possible to explain every single thing by one video. After this video, lot of things will be cleared. Lot of things. Okay. So I'm not saying from where market is reversal, but yeah, if you would love to see it, it is reversing from that last fair value gap from 15-minute chart. I'm not going here. Instead of that, I'm gonna start from here. While you see market came here, just let me make it a little bigger over here. Okay, do you have last fair value gap around that area? I'm gonna mark the last fair value gap from that area. Okay, this is the last fair value gap. Is there any other fair value gap above that fair value gap in this small price action? No, there is no other fair value gap above that fair value gap. Now, why this fair value gap is valid? Until this fair value gap is not closed by the body, I'm gonna reuse that fair value gap again and again. Okay, so market has been traded that last fair value gap. One time went lower, little higher, went lower, again went lower, much more lower. Here, what do I have? Last fair value gap or new week opening gap. New week opening gap, it is the strongest fair value gap. I'm not talking about the new week opening gap, but just remember, if you have the new week opening gap, you don't need any other fair value gap. Market went lower, went higher. What did it came? That last fair value gap. So after trading that last fair value gap, market went lower, broke that new week opening gap. When it has broken that new week opening gap and it went lower, what do I see over here? Now this is the part of looking for the order block. If market failed to break the last fair value gap, there is the last fair value gap from that leg. See, this is the last fair value gap. If it breaks the last fair value gap, then either it will trade the order block or it will trade a last fair value gap or the entry fair value gap. Anything will be traded. Here, if you just look at this price action over here, why market came here, right? You don't need to predict the low, but you will expect that either market is going to reverse or is going to give me a reversal from that area. How do you know that? First look, this is the lowest low, right? This is the lowest low. Is there any other low below this low? No, there is no other low. And you saw price came here exactly to that area. In this price action, what do you have? Where this price come before here? Look, this price action. What do you have over here? This is the last fair value gap, right? Now, this is your last fair value gap. Above this last fair value gap, you have entry fair value gap around that area. So this is the entry fair value gap. I'm gonna mark that entry fair value gap over there. This is the entry fair value gap, right? Just look at the price action over here. This is the last fair value gap. I'm not gonna mark it. This is the entry fair value gap. Just above the last fair value gap, the first fair value gap is called the entry fair value gap. Price came to that entry fair value gap, went little higher, gave you the market structure sheet. This is your market structure sheet. Let me actually mark it. Just look at this price. This is very easy to understand, but all you have to do, you have to look at the price action in a deeper way. Okay, market has given you the market structure sheet. Then there is your fair value gap, right? This is your fair value gap, our 22 YT model, perfect 22 YT model. When market has traded that fair value gap, what I told you about the lowest down close candle, the lowest down close candle is going to be your order block. That means the opening of that lowest down close candle or the high of that down close candle will be your order block. So these two level is your order block. Let's see where market trade exactly. Just look at these two level. Again, from there, the opening and the high of that down close candle. Why this one is my order block? Why not this consecutive order block? Just watch the video I have already uploaded to my YouTube channel about the order block. It will be clear. Okay. So here the 22 YT model created. First, market came here. Where did it came? To that entry fair value gap from 15 minute chart. Here, it came here. Make a setup here. Market structure shift, fair value gap. Market has traded that fair value gap one time, two time. This is the lowest down close candle. After retracing to that fair value gap, lowest down close candle, market went higher. It is valid order block. Mark the order block high and the opening on your right. Just see where the price came. Now, when it has traded the opening, I don't need the high. So I'm gonna mark the opening as my order block. So over here, this is my order block. Where the market came, is it random? No, it's not random. This is called order block retest. Market retest the order block, went little higher. Now we were now which way market will go exactly? There is the part of narrative and liquidity. Okay, this is the part of narrative and liquidity. This was the Tuesday. In Tuesday, we were expecting market will go lower. The reason is manipulation day. This is all about narrative. Okay, as our expectation was market will fall, we have to look for the last fair value gap and the entry fair value gap over here. So even if market is going higher, how far it can go? It can go either the last fair value gap. So I'm going to mark the last fair value gap. This is the last fair value gap. Okay, don't forget, this is the last fair value gap, and below this last fair value gap I have this entry fair value gap. So over here I have this entry fair value gap. It can reach either this entry fair value gap or that last fair value gap before falling. You can see market tap to that order block. The reaction, this is called reaction. Market went to that entry fair value gap, went little lower, little consolidation, tap again to that entry fair value gap, boom. This is called reversal. Market broke that entry fair value gap, went lower. It came to that area, right? When market is falling, how do you know how far it is going to fall? How far it will fall, then it will reverse again. This is the part, come here. What do you have? Another 15-minute leg. This is the last fair value gap. This is the entry fair value gap. Mark the entry fair value gap. Just entry fair value gap here. Mark it. Now I don't need to mark the last fair value gap because market didn't reach to that last fair value gap. That's why I'm gonna mark this just entry fair value gap over here. Okay. I marked that entry fair value gap. Where price came? 15-minute entry fair value gap. Again, the same thing what I have done over here. Remember? Over here. I will do the same thing over here. Just look. Market came to that entry fair value gap. Gave me the market structure shift over here. This is the market structure shift. Where is your fair value gap? There is your fair value gap. So over here, there is your fair value gap. Price traded that fair value gap. Where is your last down close candle? There is your last down close candle. Mark that opening. Extend it on your right. What did you get? Order block, right? Why price came much more lower? Mark the mean threshold of that order block. This is the mean threshold. One candle break the mean threshold, the very next candle close above the mean threshold. Still it is valid. Again, market actually retest the entry fair gap one more time. You don't need to see that one more time. If it retests that entry fair gap one more time, nothing is wrong. For example, over here, it has retested that entry fair gap two times, one time, two times. It can retest the fair gap, entry fair gap two times. Nothing is wrong with that. If you don't like it, you go for this. Fair value gap, created 22 IT model, mark the order block, price came to that order block, boom. It is going higher. I mean, it just came here, right? Very random level. Now, it is not random. If you would love to mark it, it is not random. Why it is not random? Mark a fair value gap over there. There. Just mark it. I know it's a very small, that's why I went to 1 hour fair value gap. There was a very clean 1 hour last fair value gap. But here you will be able to mark the entry fair value gap from 15-minute chart. It is also valid. And if you want to mark the last fair value gap over there, this is the last fair value gap from 15-minute chart. Okay. So this I'm gonna mark it as a last fair value gap. This was the entry fair value gap. Where price came? Entry fair value gap. After the manipulation, I was expecting that market will go higher. Exactly where it is going. See this relatively equal highs, that was my target. This relatively equal highs was my target after manipulation. So Wednesday and Thursday, I was targeting that buy side liquidity. So I was bullish. When I was bullish, every bearish entry fair value gap and last fair value gap is going to give me the reaction, not the reversal. For example, over here, every bullish fair value gap is going to give me the reaction. So over here, that was just reaction. And bearish fair value gap is going to give me the reversal. Now, the bearish fair value gap is going to give me the reaction. The bullish fair value gap is going to give me the reversal. When it will depend on your liquidity. You will see price came to that entry fair value gap, went lower. Where did it came? Mark same thing. First fair value gap, last fair value gap. As price came here to that last fair value gap, I'm gonna mark that last fair value gap. Here is your last fair value gap. You can see how beautifully price came here, then went higher. Why price exactly come here? Because there I had this breaker block. I explained why it is breaker block to my live. If you are confused, you can watch my live. I have explained why it is a perfect breaker block. Market came here exactly until that breaker block. If you don't know how to mark that breaker block, no problem. You see this constant encroachment, price come until that constant encroachment, went higher. Came where? The last fair value gap. Are you thinking that market is going to reverse from there? No, you should not think like that, because until taken this buy side liquidity, market should be bullish. So you will expect some kind of reaction from here. So that will be a reaction, and this will be your reversal. Bullish fair value gap is going to give you the reversal. Bearish fair value gap is going to give you the reaction. Which fair value gap are you going to mark exactly? Just the last fair value gap and the entry fair value gap, nothing else. You can see price came here to that last. First it came to the entry fair value gap, gave me the reaction until the last fair value gap. Again, it come to that last fair value gap, gave me the reaction. How far my price came? Again, another leg. Just mark the entry fair value gap. This is the entry fair value gap. Over here, price come here to that entry fair value gap. Boom! It has taken that buy side liquidity. Now, after taking that buy side liquidity, why price reverse from there? Just go to your last fair value gap over there. So this is your last fair value gap. First price reversed, tacked over there, went little lower, not a random level, a perfect last fair value gap over there. See, went one more higher. Now here something was messy. The reason was tomorrow is NFP. Okay, so this is an unusual run. This run is only because of NFP. That is why we didn't do anything over here. We are just watching this price action. As per ICT, before NFP, market is going to make the buy sell liquidity and the sell sell liquidity, both of them, and here algorithm is not going to work. Okay, the way we read the price, it's not going to work in Thursday, Wednesday and Thursday. That's why I'm not gonna explain this run. This is absolutely a different type of run. Just look at this run. It's fully different. Every candle is bear candle. See, from here to here, it just fall. So it's totally different. But otherwise, the way I read the price over here, you have to understand that if you are bullish, sorry, if you are bearish, you will expect the last fair value gap, last bearish fair value gap, or the last entry fair value gap is going to give you the reversal. Around that time, every bullish fair value gap, which fair value gap, bullish entry fair value gap or last fair value gap will give you the reaction. Over here, reaction, reversal. Then market went higher, entry, bearish fair value gap, reversal. Now, when price came here, now my liquidity is over here. I'm expecting market will go over here. How to mark the liquidity? I'm gonna make another video about your drawn liquidity, and I hope that that will be useful for you as well. But here, just forget about that. Just think about, you know where market is going. So if you know that, how far you will wait? You will wait until price reach to that entry fair value gap or the last fair value gap. After coming to that entry fair value gap, entry bullish fair value gap. Now I'm bullish, right? So every bullish fair value gap will give you the reversal, and every bearish fair value gap is going to give you the reaction. So over here, it came to that entry fair value gap, give you the reaction. Last fair value gap, reaction. This last fair value gap gave you the reversal. This last entry fair value gap give you the reversal. Here, when market came until a limit, and if you're thinking that market is going to fall again, then bearish fair value gap will give you the reversal, and bullish fair value gap will keep you the reaction. Keep giving you the reaction. Okay. I hope guys it's little insightful, and if you start to read the price action at the beginning, it's gonna be little difficult to understand, but at the end, if you continue to read the price like this way, I believe that after 1 or 2 weeks, you'll be master of the fair value gap. All you have to understand, last fair value gap and the entry fair value gap. When you are expecting reaction, when you are expecting reversal. If you are bearish, the bearish fair value gap will give you the reversal. In the meantime, bullish fair value gap will keep giving you reaction. When you will be bullish, the entry bullish fair value gap or the last bullish fair value gap will give you the reversal. In the meantime, every bearish fair value gap will keep giving you the reaction, just the reaction, nothing else. Over here, look over here. This is the last fair value gap. This is the entry fair value gap over here. Okay. So when you are bullish, this bearish fair value gap just give you the reaction. It came here, reversed, not reversed, reacted. It came to that last fair value gap. Look over here. This last fair value gap, it came exactly there. Okay, let me remove this one. It came here, reaction, then reversal. This bullish entry fair value gap give you the reversal. So reversal means on big leg, and reaction means just a small leg, small leg, small leg. This is called reaction and this is called reversal. Thank you guys for watching this video. I hope that it's gonna help you a little bit about the price action. If it helps you, don't forget to give me a thumbs up. Okay, and if you're new, don't forget to subscribe to my channel. Don't forget to comment below the video. How do you feel about this type of video? If you feel good, then I will keep posting this type of video. And if you think, no, it's not good, not useful, you have to be honest about your comment, then I will stop posting this type of video. I'm posting all of these videos so that you can understand how to read the price action, when you should expect the reaction, when you should expect the reversal. Drawn liquidity is the easiest one. Narrative, I have already made the video. So if you watch the narrative video, you will easily know in a specific day which way market is going. When I will make the drawn liquidity video, it will be much more clearer for you to understand where the exact liquidity is. Okay. So thank you guys. Until the next video. Cheers.